Okay, so illustration 12. Prepare statement of profit and loss of Paras Limited from the following information for the year ended on 31/3/2017 as per Schedule 3 of Companies Act 2013. So your cost of material consumed, change in stock of finished goods. Now cost of material consumed is basically uh, you can substitute it in lieu of purchase what is there in our actual format. So in the actual format we have purchases. Now instead of purchases we have cost of material consumed. Okay, then we have change in stock of finished goods, employee salary and provision for employees. So it is basically employee benefit expenses. Then sales. Okay, it is basically revenue from operation. Interest paid is finance cost. You may write over here. Okay, you may write over here. So take a pen and let's write so that then later on you're not confused what will go where. This you write purchases, then change in stock of finished goods is fine, it is change in stock. Employee benefit, then sales, revenue from operations, interest paid, finance cost, office and sales expense, so other expense, depreciation on fixed assets, so depreciation and amortization, profit on sale of asset, other income, and provision for tax 50% on profit later on. So now let's start one by one. Write the heading first of Paras Limited. Says similar exercise sum is already solved in my video lecture, so you can watch it. Illustration 12, page number 143. Okay. For year ending 31st March 2017. So let's start with first one. Revenue from operations. So we follow the order of our profit and loss statement. Okay, that will be better. So sales 12,70,000. Here in the bracket we write sales 12,70,000. Okay. Then second, other income. We have profit on sale of asset 35,000. 13,05,000. So this is 3. Total revenue in the bracket 1 plus 2. Now, next is fourth, expenses in that first. Now, over here, instead of purchase, we have cost of material consumed. Or if you want, you can write it this way as well. Purchases in the bracket cost of material consumed. So cost of material consumed is 6,25,000. Change in stock. So what is the change in stock? 40,000. Direct expenses. Now direct expense over here is not there, so I write 0. Employee benefit expenses. So employee benefit expenses, we have 2,60,000. Then finance cost. We have in finance cost interest paid 30,000. Depreciation and amortization. Depreciation and amortization is 28,000. Other expenses. Now what do we have in other expenses? We have office and sales expense 52,000. So total comes to 10 lakh 35,000. So this is what this is total expenses. So now we have to find the profit. Auto formula already I have put because it's Excel. For you, you have to manually calculate. So you write profit before tax in the bracket 3 minus 4. So 3 minus 4 is 3 is 13 lakh 5,000, 4 is 10 lakh 35,000. You get 2 lakh 70,000. Then 6 provision for tax. Now this provision for taxes at the rate 50%. It's given in the question 50% is the provision. So 2 lakh 70 divided by 2. 13 lakh, 1 lakh 35,000 and 7 profit after tax. So this will be 5 minus 6. 1 lakh 35,000. So this will be your final profit after tax, which will be available for shareholders, which can be distributed as dividend as decided by the company. So that's it. The sum is over. You can see a very simple sum can come for 11 marks. If you have any doubts, please raise your hand and ask the doubts. If not, make format for illustration number 30. So let's start the session. So illustration 13, prepare statement of profit and loss of Shri Sajanand Limited from the following balances for the year ending 31st March 2017 as per Schedule 3 of Companies Act 2013. Now office and sales expense will go to other expense. You start writing sales, revenue from operations, I'll write revenue, salary and wages. Both will go to employee benefit. purchases. So directly purchase will go to purchase. Now we have opening stock and we have closing stock. So this we have to see the difference. Okay, so later, because opening is 60 and closing is a 70. So opening minus closing we have to take, we'll see it separately. Okay, don't worry students. Debenture interest. Debenture interest is finance cost, and profit on sale of investment. And profit on sale of investment is other income. And provision for tax is directly given. So provision for taxes go to provision for tax. So not to worry. So let's start with the sum. Now we start with first revenue from operations, sales 16 lakh. Other income, profit on sale of investment 26,000. So what we get is third total revenue 1 plus 2. Now next is expenses. Let me leave this line. Expenses. Now purchase, directly given purchase 7,10,000. And change in stock. So opening minus closing. Now opening minus closing. When you go for opening minus closing, you can write over here. Opening stock is 60,000 minus closing stock 70,000. So it comes to negative 10,000. So minus 10,000 over here. So minus 10,000, or you can write 10,000 in the bracket. So here please remember, opening minus closing we have to take. So here it is minus. Okay, so be careful about this. Let me highlight it in red so you know it is negative. Okay, so purchase, change in opening, change in stock, direct expenses. Now what do we have for direct expenses? Over here nothing, so 0. Employee benefit expenses, we have salary plus wages 5,40,000. In the bracket I'll write salary plus wages 5,40,000. So finance cost interest on debentures. Interest on debenture or debenture interest 20,000. Depreciation and amortization. So depreciation and amortization over here, it's not there. Great. So 0. And then other expenses. In this, we have office and sales expense 40,000. So 13 lakh. So now we have fifth, profit before tax, third minus fourth, which is 16 lakh 26,000 minus 13 lakh. So 3 lakh 26,000. Provision for taxation or for tax already given 1 lakh 26, 1 lakh 63,000. So what we are left is profit after tax, which is what? Which is fifth minus sixth. It is 3 lakh 26,000 minus 1 lakh 63,000. So it comes to 1 lakh 63,000. Your final answer. Just some nice color. So very simple. Okay, you just remember the format, put in the values, and take home 11 marks. Okay, I forgot to write the heading, so I can write it now. Of Shri Sahajanand Limited for year ending 31/3/17. That's it. Heading is important to get full marks. Okay, amount rupees, particulars, everything is important. Note number is not compulsory over here because we are not making the notes over here. Now, very important, illustration 14 is what we'll be doing. Please make the format. So illustration 14 is a very important sum. Okay. Now, over here, following is the trial balance. So trial balance is given to us of Shivam Limited as on 31/3/2017. Now, you can see various assets, expense, and other balances are given to us, liabilities and equity and everything over here. And from this, we have to prepare a statement of profit and loss and also balance sheet. So we go one by one and first we write down. Okay, so inventory. Okay, so inventory is basically your balance sheet head, asset, your main head, current asset, and then inventory. So you write over here A/CA/I. Fixed asset tangible is again asset, non-current asset, and fixed asset tangible. Then equity share. So balance sheet head is equity and liability, shareholders fund, and share capital. Sales. Sales is directly revenue. So write revenue. Other income is other income. So it will here you also you can write like this. PL/PL/ profit and loss slash profit and loss revenue, profit and loss, other income. Employee benefit, profit and loss, employee benefit. Long-term borrowing. So equity and liability, current liabilities, and long-term borrowings. Then finance cost, profit and loss, directly finance cost, expense. Okay, so I write expense, finance cost. Trade payable. So again, equity and liability. Then current liabilities and trade payables. Trade receivable, asset, current asset, trade receivable. Cash and bank balance, asset, current asset, cash and cash equivalent. Depreciation, profit and loss, expense, depreciation. Cost of goods sold, profit and loss, expense, purchase. So it's basically a purchase, combination of purchase and change in opening stock. Okay, change in stock. Sorry, change in stock, because cost of goods sold is opening plus purchase expense minus closing. So even direct expense is included in this. Anyways, non-current investments, assets, non-current assets, non-current investments. After this, we have provision for tax. Okay, so we'll see that later separately. There is an adjustment. So let's start with the sum by writing the heading Shivam Limited. For year ending 31/3/2017. ईयर एंड 31 दिसंबर 2020 मत लिख देना. ओके, मुझे पता है तुम लोग बहुत फैसिनेटेड हो इससे कि 2020 गया तो ईयर एंड यानी हमारे सब का ईयर एंड. ओके, नॉट अपना ईयर एंड. क्या आज 31 दिसंबर 2020 है तो हमने वो लिख दिया सर हमको पसंद ही नहीं था तो वो लिख के उसको जाने दो इस हमको. सो ध्यान रखना प्लीज. एंड ओके, सो 31 March, then write the heading of Shivam Limited. So let's start with the sum now. First we'll do profit and loss. Okay, statement of profit and loss, and then we will do the balance sheet. So let's start with the first. Revenue from operations, sales. So 7,50,000. Other income, directly given 20,000. So 7,70,000. What is the total revenue? Next. Fourth, expenses. Now let's go one by one. Now we don't have purchase, we don't have change in stock, okay, because that is all given in the form of cost of goods sold. So we just write cost of goods sold. Directly we can write cost of goods sold 4 lakh. 4 lakh. Okay. So what comes over here? Direct expense will come, purchase will come, change in stock will come. All the three will be combined in cost of goods sold. Okay. So cost of goods sold. Then next is employee benefit expenses. So what do we have for employee benefit expenses? 1,30,000. Finance cost. What do we have for finance cost? Let's check out. Do we have finance cost? Yes, 17,500. Depreciation. and amortization 22,500. Other expenses. Now other expenses, you can just check out. It's not there. So 0. So total expense 5,70,000. Now fifth, profit before tax. Because it is in Excel format, I've already kept the formula. That's why directly you are getting the answer 2 lakh. So it is third minus fourth. Provision for tax. Now provision for tax is already given in the question. Directly amount is given 80,000. So seventh, profit after tax, which will be 5 minus 6. That is 2 lakh minus 80,000, 1 lakh 20,000. So now you have to be a bit careful over here because this provision for tax will have one more effect, and that effect will be in the balance sheet. So I'm highlighting it, provision for tax. Okay, short-term provision, that's the heading. Now let's go for balance sheet. First, equity and liabilities. In equity and liabilities, first is a shareholders fund. In that, share capital, a bit of a formatting is required, okay, from my side. Hold on. Now, share capital, we have how much come to share capital? 5,000 equity share of 100 each, 5 lakh. So I'll mention it. Okay. 5,000 equity shares of 100 each. So 5 lakhs. B, reserves and surplus. Now, see again, an important point over here. Now this profit, okay, I need to mark this as well because that will also be transferred to capital. This profit for tax, okay, will be part of our reserves and surplus. So I write in bracket profit after tax from statement of P&L. So that is how much profit? 1,20,000. So important. Now I'll highlight this. So 6,20,000 outer column. Now second, non-current liabilities. Long-term borrowings. Directly given in the sum long-term borrowings. So let's check out long-term borrowings. So 3,50,000 Other long-term liabilities. Now, other long-term liabilities, we don't have it, so I put 0. Third, long-term provisions. In exam, you may write only what is given. That is also fine because in textbook it is done that way. I am doing everything so that it becomes a revision for you as well. Okay. So we don't have long-term provisions. So then we go to the third one, current liabilities. In current liabilities, short-term borrowings. Now, do we have short-term borrowings? Let's check out. We don't have short-term borrowings, so 0. Then B, trade payables. Now we have trade payables. Okay, trade payables is 1 lakh. Then C, other short-term, other current liabilities. I don't think so. We have other current liabilities. No, but we have short-term provision. Okay, so D, short-term provision. In this, we will write provision for tax. So in the textbook, you just correct it. Okay, provision for tax. So how much is the provision for tax over here? 80,000. So I'll write over here 80,000. So now I'll highlight this provision for tax. So we know from where we got it. Provision for tax and profit after tax as a part of reserves and surplus. So done. Then next one, assets. Non-current assets. Fixed assets, tangible. So fixed assets tangible is 8 lakh. Intangible, we don't have. And C, non-current investments. Now let's check. Do we have non-current investments? Yes, non-current investment 1,40,000. EIN, long-term loans and advances. Do we have long-term loans and advances? No. So zero. Other non-current assets. Again, we don't have zero. So 9,40,000. Second, current assets. Now in current asset, current investments. Let's check. Do we have any current investment? No. So no current investment. Zero. Inventories. Now we have inventories. First one lakh 10,000. Now you may have a question, sir. We are getting inventory over here, which is closing stock 1,10,000. Then why we did not include it over here, change in the stock? Because here we are taking cost of goods sold. It means cost of goods sold already includes the adjustment of opening stock and closing stock. That is why it does not come over here separately. Okay, it is part of cost of goods sold. And the second effect which comes to balance sheet, 1,10,000. And that's why whenever in a trial balance, if a closing stock is given, it means you will be given with either adjusted purchases or cost of goods sold. So that's why we have inventory over here, which we have written 1,10,000 CIT CSO, cash and cash equivalent. So cash and cash equivalent is cash and bank balance. So cash and bank balance 60,000. I'm sorry. Current inventory. इसके बाद you will have trade receivables. Okay. See trade receivables. So we also have trade receivable over here. Yes, that is 40,000. See if order you change over here. Okay. I don't think it would be a good thing. You have to follow the order. So in case if you forgot to write something, that won't be right. So please be careful. Okay. D cash and cash equivalent we have already written. E other current assets. Zero. So you can see over here the total 11,50,000 and over here the total 11,50,000. So our balance sheet tallies. Now, in case you forgot to write this reserve and surplus, okay, your balance sheet will not tally. In case you forgot to write this provision for tax, your balance sheet will not tally. Okay, so please be careful about it. Okay, you have to write this. So don't forget that. Well, from where they'll come? They'll come from your provision for tax. So it's a short-term provision, and profit after tax is which is transferred to capital. So over here, what is capital? We don't have capital. We don't add it to shareholders. We don't add it to equity share capital. We treat it separately as reserves and surplus. So that's why it will come over here. So that's it. Let's go through it once and see if you have any doubt. Receivable cash and cash equivalent, cash and bank balance 60,000. CITCSO short term loans and advances not there. Other current assets also not there. Total 11 lakh 50 and 11 lakh 50.